Now, this is huge for retail, and the big question is, will the demand for these tokenized assets that track the price of the underlying asset impact the price of the stock? Well, the answer is it depends on the structure. If a tokenized asset is fully backed one-to-one in a custodial fashion, that would of course increase demand for the underlying asset and drive up the price as people buy more of the tokenized variation. A synthetic variation, which is a simple derivative that mimics the price of the underlying asset without actual ownership, would not have that same impact, and it seems that that's what a lot of these initial offerings are. There's also a third fractionalized approach that could break shares into smaller pieces via tokenization backed by a custodian again. However, I haven't really heard any entities talk about this approach yet. Regardless, any variation is great for retail because it gives retail a chance to get into an asset that they otherwise couldn't own without being an accredited investor and purchasing exposure via an SPV. And trust me, as someone who has explored several SPVs, it's not worth the premium, the fees, or the lack of liquidity. So let's get into the charts to see how the week has started off.